got me falling right back.
Thank you for tuning in to Ribley Forex Education channel. This video is for complete beginners who are interested in trading foreign exchange. Hello and welcome. My name is Abnolo. In this video we are going to be discussing how to read charts in Forex markets. If you can't read the charts, then you won't make sense of any of the data provided on the charts. There are many chart analysis techniques which can be used to give you the best chance at making profitable Forex exchanges. It's recommended you understand the principles of all these techniques prior to sinking your own money into the Forex market. Okay, let's get started. What are Forex charts? Forex charts are essential tools for Forex traders who wish to use technical analysis to determine where to invest their funds. Technical analysis is the review of past market prices and technical indicators to predict the future, short-term movements of an investment. Charts can be placed into three different categories, such as line charts, bar charts, and candlestick charts. We can start by discussing the easiest chart to read, the line chart. Line chart is the easiest chart in Forex. It represents a curve, which shows closing price for a certain period of time. Line charts can be also based on the median price, opening price, lows or highs. A line chart is the first thing, which beginners learn in the financial market. It simply shows a line graph of time versus price. The next chart to decipher is the bar chart. A bar chart is a little more complex. It shows the opening and closing prices, as well as the highs and lows. The bottom of the vertical bar indicates the lowest traded price for that time period, while the top of the bar indicates the highest price paid. Each horizontal line represents one time period. The period is selected by you to represent 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, a day, a week or a month. The final chart to decipher is the candlestick chart. Candlestick charts show the same price information as a bar chart, but in a prettier graphic format. Many traders like this chart because not only is it prettier, but it's easier to read. This is done to allow a trader to easily visualize a period bar to have moved in a positive or negative direction from its entry price. Traditionally, if the block in the middle is filled or colored in, then the currency pair closed lower than it opened. In the following example, the filled color is black. For our filled blocks, the top of the block is the opening price, and the bottom of the block is the closing price. If the closing price is higher than the opening price, then the block in the middle will be white or hollow or unfilled. A lot of traders don't like to use the traditional black and white candlesticks, so they change them to suit their desired look. How do we interpret charts? Now you know what line charts, bar charts, and candlestick charts look like. How do you interpret them? Firstly, you have to understand that these individual bars or candlesticks only represent one time frame. Let's have a look at the following image that show each bar represents 1 hour. The x-axis represents a time interval, and the y-axis represents the currency pair price. Each single bar represents the high and low of that 1 hour period, the entry price, and the exit price at the end of the hour. Each bar can be represented in all sizes and lengths. Thank you for watching. If you enjoyed the video, please hit the thumbs up button. And if you want videos like this, please hit the subscribe and bell button below. You will be notified when a new video is uploaded.